Ah, damn. Waiting for you guys. Let me know in the comment section when you are here. Anyone that is here should let me know in the comment section. Who is here? Is it Daniel or who? Waiting for you guys. Let me know in the comment section. Anyone that is here should let me know. Who's here? Daniel. Let me know when you get here. Let me know who are here. Daniel, Chris, Let me know when you are here. Let me know who and who is here. Let me know before I continue. Who and who they here? Let me know before I continue. I'm waiting for you guys, and anyone that is here, let me know. Let me know who's here. Let me know. Identify yourself so that I can know who is here, so we can start. I'm waiting for you guys. Okay, we have Chris here. Okay, so we have Chris. Still waiting for two more people. So we have Chris. Still waiting for two other people. Can you hear me? Can you hear me now? If you can hear me, let me know. Can you hear me now? Or you still can't hear me? Okay, good. So Chris, before the other before others get here, what do you need? Like, what don't you understand? What do you need an extra explanation on? What part of liquidity don't you understand? Be specific with it, like what part of liquidity don't you understand? How many type of liquidity do we have? We have two type of liquidity: the external range liquidity and the internal or structural range liquidity. Where can we find liquidity at? Equal highs, equal lows, swing high, swing low. Mm-hmm. The external range liquidity is like the external range liquidity is like liquidity that you can find on swing high and swing low. You get swing high, swing lows. You find them here. For example, now let me show you in this chart now. For example, now this is a swing high. There's liquidity resting there. This is a swing high. There's liquidity resting there. This is a swing high. There's liquidity resting there. So all these highs now we are in a downtrend. So all these highs we have liquidity resting on these highs because we are in a downtrend. You get we're in a downtrend. So all these highs we have liquidity resting here. This high we have liquidity resting there because the market has not come back to come and take it. This high also there's liquidity, and this is equal high. This is relative equal highs. There's liquidity resting there. The market has not gone there to come and take out the liquidity. The market is just taking this low, this liquidity at here. So the market is preserving liquidity on this high for it. So the market is still yet like the liquidity. If you are in a trade now, you can target here as your take profit because there's liquidity there. So the market is highly likely to come here and come and take out this high. You get. Do you understand now? Okay. So who else is here? Before we start, who else is here? I don't want to be like repeating myself. Tejiri, you say you're online and you are not here. What's going on? And Daniel also said he was going to be. I think he was the first person that said he was going to be active, and he's nowhere to be seen. What's going on? It's only you. Yeah, I know. Like this in Teji said she's online inside the group and she's not here. And I need you guys to be in sync so that I can like we can migrate from here and I'll move you to another group where we'll be sharing like I'll be sharing trades with you. We need to be done with this like with the lectures on how to trade, because I have specific things that I listen that I'm trying to teach you. So once you guys knows how to do that, then we'll start taking trades together. We'll start going live, taking trades together, and you guys will see the way I execute the market, and you can just implement that into your trading. But we still haven't talked about risk management. So we haven't talked about discipline. We haven't talked about psychology of the market. Still a lot that we need to talk about. That really don't have time like that. So this was the reason why I asked, like, you guys are going to be available, because before I sacrificed, I was supposed to be watching Barcelona's match now, but I sacrificed it just to come and entertain you guys, just to come and be here for you guys, and you guys are nowhere to be found. Are they still not here? If you're not here, obviously, like, you can just tell me, like, the areas that they are not really good at, the areas that you are still finding very difficult. So if you tell me the areas, then me and you would we'll talk about that. And because obviously I can't be teaching only you, because they'll still need to come back and be like, you don't understand. But funny enough, okay, so we have Tejuri here. Okay, hello, how are you doing, Tejuri? Do you have good internet now? So we've spoken about external range liquidity, type of liquidity, and where we can find liquidity here. So now we are going to be speaking about structural liquidity, or you can call it inducement. You can call it inducement or this thing. So this is what a structural liquidity is. This is what a structural liquidity is. Let's say we have an uptrend. let's say we have an uptrend, right? Okay, so let me just end it here. Let's say we have an uptrend. So let's say we have an uptrend, right? With what we've spoken about. Why is my mouse doing like this? Okay. Sorry guys. Okay. So let's say we have an uptrend now. We have an uptrend right here. So we have our I'm gonna have to use another one. So let's say we have an uptrend. So for example, we have an uptrend right now, and in an uptrend, what do we have? We have the point of interest that was responsible for breaking this structure right here. The point of interest that was responsible for breaking this structure, we have a break of structure. So once you have your break of structure, now we have in for you to know a structural liquidity or an inducement, you need to have a break of structure and a point of interest. So the structural liquidity or an inducement is the first fail pullback to the break of structure. Like I taught you guys, if you're in an uptrend now, if you are going to take a buy now, we'll be looking at this point of interest to take a buy from. But we are not just looking at this point of interest to take a buy from. We are looking at inducement. We want people to start buying early to create liquidity around that area, so that when the market comes, it will come and take out people that start buying early before it triggered the real zone, before it start buying. You get? So the first pullback after a valid break of structure, that is our liquidity or inducement. Do you understand? The first pullback after a valid BOS. So that's our that's our inducement. The first pullback. So this is our internal range liquidity. This is our structural liquidity right here. This right here is our structural liquidity right here. This right here, this low right here is our structural liquidity. So that's a liquidity, and we can look for price to come back here and give us an entry from here. So we can look for price. Hello, are you guys there? So we can look for price to do what? To come back, sweep this liquidity, then it will give us an entry around here. So this is the structure right here. We have a break of structure. After breaking the structure, the first pullback, this first pullback after a valid break of structure to the direction of the trend. So the first pullback, that is our structural liquidity. That is our inducement. So that's a liquidity that the market needs before it taps the point of interest. Remember, if you are looking to take a trade from a point of interest, when you mark out the point of interest must have liquidity nearest to that place, because that liquidity is going to be the fuel that triggers that point of interest. So after the market collects the fuel, it will trigger that point of interest and reverse to the area that it's going. You get? So a valid point of interest must have a structural liquidity or an inducement. Structural liquidity and inducement are the same thing. You get, you must have the first fake buying. This is the first fake buying before the original place gets triggered. And this inducement, for you to recognize a valid inducement, it needs to come close to this high or break the high a little bit before retracing. So we might come close to this high and fail to break the high before coming back. That's still a valid inducement. You get, that's still a valid inducement. So when price is approaching your point of interest, the first pullback, that is the inducement, that that's the structural liquidity. Do you guys understand? Before I make other demonstrations. Teji, do you understand? Teji, do you understand? Okay, you understand, right? Okay, good. So let me make another demonstration of an inducement. Of the inducement can be in a lot of form. It's not just like that. It's not just in that form. Obviously, it's the same thing. It's the same thing if we are in a bearish momentum. Let's say we are in a bearish market. You get, we are in a bearish market and we have the first break of structure. The first break of structure, pull back. You get, so this is the break of structure. This is the break of structure. And this is our inducement. So this is our area. This is the point of interest that was responsible for the break of structure. This is in the inducement. You get, this is the inducement. Simple as that. It's the same thing whether bullish or this thing. It just need, before you take any trade, you need to firstly identify the trend. And I think I've taught you guys how to identify a trend, right? So once you know how to identify your trend, you wait for this thing. You wait to identify a point of interest. You wait to identify a break of structure. Then you wait for your inducement. You get, so when price comes back into your point of interest, there's still a last step that this thing that will teach you guys. Then you can start trading. You get, then we'll start sharing trading ideas. Do you understand? If you understand, let me know before I listen. Before I continue to other demonstration. So this is the bullish scenario. First of all, you need to identify your trend. If you identify your trend, then we have this thing. We have a break of structure. If you have a break of structure, what are you looking for? You are looking for the point of interest that was responsible for breaking the structure. After having a break of structure, then you are looking for a false pullback, which is the inducement or structural liquidity. You get a false pullback or an inducement of structural liquidity. After having that inducement, then when price gets back to that area, that's when you put your sell limit. You get, that's when you put your sell limit and wait for confirmation. I'm going to teach you guys confirmation on the next video, and after that we'll start trading. You get, so when price get to your point of interest, you wait for selling confirmation on the lower time frame, then you sell. Very simple. Can you hear me now, and do you understand? You still don't understand. So when you have a break of structure, first of all, you need to identify the trend. Like I've taught you guys how to identify a trend here. Let me know if that is a yes. Then after identifying the trend, you wait for a break of structure that follows the same trend that you're identifying, that follow the same trend of the market. After that, then the point of interest that was responsible for the break of structure, after identifying the point of interest, then the first pullback to that point of interest, it must not touch the point of interest. It just need to be a first pullback and people start buying there. So after people start buying there, then that will be your inducement. And for the inducement to be valid, it needs to come very, very close to this high or break this high before price returns and come back and come and tap you in. You get, and come back and come and tap you in from the original point of interest that you are trying to take, sell from, or buy from. Then if price get to that area, you just look for lower time frame confirmation and you enter your trade. Very simple as that. Do you understand now? Okay, good. So what we are doing, so what we have next now is, so now let me draw a this thing for you guys. Let me draw another scenario for you guys. Of course, we are going to get in the chart to identify this in what I'm teaching you, but so let's say we are in a bullish trend. You get, we have a break of structure and the market is coming down like this, like this. You get, the market is coming down like this. You see this, the market is generating a this in a trend line liquidity. You get, the market is generating liquidity. It is creating liquidity to that area. You get, it's creating liquidity for this point of interest. You get, this is creating, I told you the type of liquidity here. We have trend line liquidity. So when the price is approaching this point of interest, it's creating a trend line liquidity that is approaching that. So it's creating liquidity there, and when price wants to come and tap the market, to tap the market and come and clear all this liquidity. So your entry will be here, your entry will be here, and your stop will be your take profit will be here for so your entry will be here, your stop loss here, and your take profit will be above here. You are anticipating that the market will come and clear out all this liquidity that is generating here. You get all this trend line liquidity. We have all this high. That's where you are anticipating the market to come and clear them. Do you understand? So you need to watch out, like when you mark out your point of interest and you have your break of structure, you need to watch out what price is doing before it's approach your point of interest. If it's generating liquidity before it approach your point of interest, then that point of interest is a very good point of interest because it needs liquidity to trigger that trade. You get? Yeah, it's just a scenario. It's not. I'm not saying long or this. It's just a scenario that I'm printing for you guys of what the market is doing. So after this, now we'll get to the market and you see. So do you guys understand before we move on to the next stuff? And they gift on YouTube. You want to give me gift on YouTube. Okay, good. Yeah. So the thing is that like after this in the YouTube we are going to be learning there and starting Monday I'm going to be trading live on TikTok every Monday to Friday. So we can be like doing the same trades and everything. You guys will see the way I trade and everything. So yeah. The gift you won't give me, send them as money. So do you guys understand? Let's move to the real chart and let me show you what it looks like on the real chart here. Yeah, Monday to Friday. That's when I start trading live on TikTok. So let's go to the chart and I think I have a setup on BTC. I have a trade in BTC that's currently running now. So let me show you. As you can see, all my trades like this thing is the same setup that I take on all my trade, and I will show you even my previous trade that I took on Euro GBP is the same setup. It's not like there's really nothing. There's nothing. If you master this in this strategy that I'm showing you, if you master how to trade like this, you would be very very. So look at it. Look at it here from this high right here. Hmm? What can you guys see here? Like what can you guys see here? What's happening here? Just looking at this, what are you guys saying? It's SMC concept. It's smart money concept. I trade both listen, like I call it price action though. It's more of price action to me than SMC and obviously support and resistance. Like there's nothing when it comes to trading, there's only two things: price action and support and resistance. Those are the only two things that works in the market. Every other thing apart from that is nonsense. So what do I have here? What's going on here? This area, what's going on in this area? What do I have on this area? This BTC chart. So if you want to open it on your own, and this is the 5 minutes, what do I have here? Where do you see your core highs? What was the first thing that I taught you guys? No. What was the first thing that I taught you guys? I taught you guys break of structure. Right? When you enter the market, you must always look for the structure of the market. That's the first thing you must always look for. When you enter the market and you want to take a trade, you must always look for the structure of the market. So where is our break of structure? We have our break of structure here. We have our break of structure here. You get? So where was the area that was responsible for breaking this structure? This area. You get? And price, this point of interest. And price came here, pushed the price to come and break another structure here again. But when we want to come and break this structure, we had a double leg break of structure pattern. Look, consolidating. No, it's not consolidating. This is what I'm saying. I'm saying here. I'm not talking about here. Here is consolidating. This is the area that I'm talking about. This area right here. That's what I'm talking about. So when we were coming up from here, we had a double break of structure pattern. You get? We had a double break of structure pattern. And in double break of structure, what did I tell you? You mark out two point of interest. So because we had an existing order block here already, so this other block is our point of interest number one, and the second order block here, is our point of interest number two. You get? So in a scenario where we have 2 points of interest like this, why did I take my trade from this first point of interest? Why did I take my trade from there? No answer? So in this area, we have this first break of structure, and this was the point of interest that was responsible for breaking this structure. And after this break of structure, we had another break of structure here, and before we break this structure, we had a double leg break of structure pattern. I taught you guys that. Didn't I teach you? So now this double leg break of structure pattern, I said in a double leg break of structure pattern, we will have two 2 point of interest. The first point of interest, which is this one, and the second point of interest, which is this one. But because we have an existing order block below this already, so this is now our point of interest, we ignore this and we'll have this and this. So when we have 2 point of interest, why did I take my trade from the first point of interest? Tejiri, do you get that? There's nothing like it will obviously go bullish. There's nothing like that. You don't have any certainty. When you're taking a trade, you have your why and you have your no. Why did I take my trade? Obviously, we know we are in a bullish trend. We are looking to buy. But why did I buy from that first point of interest? Why did I buy from here and not wait to buy from here? Why did I take my buy from here and I didn't wait to buy from here? Teju, you did not understand. Don't do me why you don't make me. Because of the change in market. No, like from here, we already know that we have a change in market structure. I just taught you guys this now. I took my trade from this because this point of interest had an inducement. It had an inducement around here. What did I tell you about inducement? When we have the break of structure, the first pullback, you see this first pullback, this is our inducement right here. An inducement, what are the rules for inducement? It needs to come close to this high or break this high. It needs to give us another break of structure or come close to this high before we have the inducement. You get, and we have the inducement, and we have another liquidity trap here again. That was the reason why I took my buy from here. It had an inducement. You get, it had an inducement, and this, okay, let me read. This is the inducement because after breaking this structure, look at this retracement back. This is the first failed pullback. Then it went up, broke structure again before it eventually come down, consolidate before it tapped the zone, and it gave me an entry and I entered from it. So what are you saying? Understood? You see, you're not going to get it this first. But if you don't back test everything I'm teaching you, if you don't go into the chat, I'm giving you assignments and you guys are not coming up with the assignment. I've done my part. My part is to teach you. I'm teaching you. So if you don't back test and go into the charts and go and look for what I'm teaching you and make sure you practice enough to be able to see it. See, and if you are backtesting, Chris, I'm telling you this, like you are the one that I'm facing it with this. If you are backtesting and you are putting your money just because you see, like if you've not gotten to the stage, that's the reason why I say you guys should have the account, because the account will give you leverage to backtest for a very long time, and you have a sense of attachment towards the fund, because obviously you use money to buy the account, and the account will actually give you know that if you lose the account you've lost money, but it will give you a better leverage. You have a lot of capital to play and backtest with. You get it? So when you are backtesting, you go and put this in real life money. The first 10, 20 trades you might lose it. You get it? There's a high possibility that you lose it, because everything that I just taught you now, it will take you nothing less than 2 months of steady back testing on multiple pairs, and forward testing also. Back testing alone is not enough. You need to forward test it, predict, wait, and react. You get? Predict, wait, and react. You wait for the market to do what you want to do. You need to forward text this thing too and know how to identify it before the market prints it. So everything that I'm teaching you is not as if you go to the market tomorrow and you turn to a magician and you get, you would just go and this thing. If you like, hear word. If you like, don't hear word. This is what I am meant to teach you. I've taught you what I need to teach you. I'm still going to teach you guys entry, but I'm not going to teach you entry until you guys go and back test, and like you come back to me with enough data that you've back tested. I need a lot of screenshots for you guys identifying what I am saying, like the way I'm identifying it, the first point of interest, second point of interest, double break of structure, our inducements, everything. You guys need to go and identify it. Yeah, I'm on you because you have strong head. You have strong head, and you like I don't want you to suffer a lot. I don't want you to suffer a lot for real. So because I know what trading did to me. Like at my beginning stage, I didn't have anybody to tell me not to do anything. Or everything I do is just online, hearing people and trading, you lose money and blah blah blah. I didn't have anything to tell me the specifics. The way I just laid it down for you. Everything I taught you guys now, like the step is just the steps that I'm teaching you. And if you follow the steps the way I taught you, first of all, I taught you guys how to identify the market structure that will give you the trend of the market. I taught you the type of break of structure, how to identify liquidity, internal and external range liquidity, your proper point of interest. You get your proper point of interest. If you can take all this and like put it together towards something and go and backtest to make sure you actually see what I'm saying, to make sure you build yourself to an extent where you don't need to draw break of structure, you don't need to draw any trend line, you just look at the chart and you see it. If you can do that, and I'll not lie to you, like backtesting will take you a month and forward testing will take you like 2 months before you can master it on your own, before you can do this on your own comfortably. It will take you more than 2 months forward testing, not just backtesting, forward testing, waiting for the market to happen and seeing how the market is moving and predicting, so that you master it and you have confidence in yourself. If you do not wait and you are putting money, you are going to lose a lot of money. There's nothing like trading this thing. Trading is not something that you get, they will teach you something and you know it just like that. No, you need to wait. You need to forward test. You need to build a system and you need to trust your system. And for you to trust your system, you need to go through the psychological battle of waiting for this, of waiting 2 hours for a setup, and the setup will fail, but you will learn from it and you will wait again. That's how trading works. So I'm just saying. So the entries, I wanted to teach you guys, but I'm not going to teach you guys the entries. I have like candlestick formation for entries and everything, but I'm not going to teach you guys that. I need you to go and back test, and I need you to go and back test, do this kind of setup for me, predict setup, and send to me, this is my point of interest, this is my inducement, and I'm looking at this area to hold. This is my point of view. This is my break of structure. This is my pattern. This is everything. And I'm looking at this thing. Like, you guys should back test. If you not back test, I'm not going to teach you anything again. I'm not going to teach you anything. I'm just going to wait till you guys back test and bring me enough data. So let me show you another trade that I took same using this same this thing, the same setup on everything that I taught you guys. So Euro GBP. Yeah, you also need forward testing. Also, it's not back testing alone is not enough. You need forward testing also. Forward testing is actually more important than the back test itself. Get forward testing is more important than back testing, because back testing is just data that has happened. Forward testing will give you the emotions and everything and how to correctly predict the market. That's what forward testing will give you. So this is the when you're looking at this chart now, what are you saying when you're looking at this chart now? When you look at this chart right now, what do you see? What structure is this market in? First of all, you identify the structure of the market. You get, before you start doing anything, before you start looking for liquidity or anything, you identify the structure of the market. You get, you identify the structure of the market. That's what we are going to identify first. So looking at this structure now, what structure do we have from here to here? What do we have here? Remember, when you open trading view for the first time, the first thing you should train your eyes how to do is identify the trend of the market. No matter how great the setup is, if the trend of the market is wrong, you are going to hit stop loss. You are going to lose trade. The trend of the market respect the trends more than any structure. So training yourself on how to identify the trend is very is even the single most important thing in trading. Like, it's 50% of the strategy, training yourself in how to identify the trend. So when you look at the chart, the first thing you are seeing is the trend. When you look at the chart, I want you to train your eyes. When you look at the chart, the first thing you are seeing is the trend. And how do you identify the trend? Higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Simple. You don't need this thing. See, high, lower low, lower high, lower low, lower high, lower low. And if you guys have been back testing, you don't need to be guessing all this. If you guys have been back testing, you don't need to be guessing all this. You should have trained yourself to know that this is how this is what I'm looking at, and this is exactly what I'm looking. You should have trained yourself to know that. But no wala. So the market is bearish. So when the market is bearish, we have a break of structure here, right? We have this market coming down. Let's say from here we have this market coming down, and we had a break of structure here. We have we have a break of structure here. So after, I'm not saying you're not right about the liquidity. I'm not saying you're not right about liquidity. I'm saying what are you seeing overall? And when I ask what are you seeing overall, I'm asking about the structure of the market. You get when I say look at this chart now. What are you seeing overall? I'm asking this about the structure of the market. The structure is the direction that the market is going, and you need to know the direction before you identify where the liquidity is, before you identify your point of interest, before you identify the break of structure. You firstly need to know the direction. That's very, very important. So we have the break of structure here. Breaking this structure to the downside, where was our last order block, our last buying candle before the sell comes in? We have this order block right here, this last selling candle. That was our order block. You get, that was our order block. And after identifying the order block and we broke structure, what are we looking for? We are looking for inducement to verify and confirm that range, that range is a strong range to trade from. You get, and where is our inducement? After breaking this structure, we have this first pullback right here that failed. This first pullback, that's our inducement, that's our liquidity, that's our structural liquidity, because the point of interest is still intact and we have this structural liquidity right here. And after that, the market was generating a trend line liquidity. You get, generating liquidity around this high, generating, it was trending because obviously the holidays, it was after Christmas, and this trade was like a day before New Year. I took this trade on a Thursday or something like that. So this the market was generating liquidity after we have our structural liquidity here. And after you have your structural liquidity that confirms that this is a valid point of interest, that's when you will be looking to take sales from that point of interest. There's still lower time frame confirmation, because you are not going to be trading on the lower time frame, on the 1 hour, 2 hour, or 4 hour time frame. It's just for you to identify the trend and pick the right point of interest. You are going to be trading on the 5 minute, 15 minute, and 30 minute. So after this structural liquidity, we have this point of interest right here. We have this point of interest, and after the point of interest, you just, when price get back there, because I'm not going to teach you guys this in entry model yet. I need you guys to back test and come back to me with enough data. When price comes back there, that's when you put your sell limit, and then you target the most recent low. You know, this lower low, because the trend is bearish and you're expecting price to create another lower low, and that was what we did here. And you have price to 3.9. So you see, it's the same setup as the other one, as the previous setup that I showed you on BTC. The same setup, nothing, nothing outside that setup. I don't trade anything outside this setup. It's the same setup that I trade every fucking time, and I had to train myself to. Although I have other setups that I know that I've mastered, but this is the one that has made me that's given me the most payout and everything. This is the one that I've mastered. I trade support and resistance too, and you guys, I'm going to teach you guys also that. But once I teach you entry models, if you backtest and know it, you are good to trade. Once you are able to look at the market, let me write it down for you guys. Direction. You get, point of interest, liquidity, and entry. You see these four things. See these four things. These are the things that you need. So the reason why I taught you guys market structure was because I want you to look at the market and know the direction of the market. That was the reason why I taught you market structure. And the reason why I taught you order blocks and point of interest is an area where there is volume from, where there is momentum from. And the reason why I taught you guys liquidity, structural and external liquidity, because those are the places that you will be targeting for your TPs and entries. You get, so if you know how to identify your direction, your point of interest, your liquidity, and you can successfully, and you have an entry model that you are looking for that area, you can trade already. Just knowing this, like these four things, just knowing these four things, you can trade already. Although there's still, like, you still need to have market experience and everything, but if you can master all this and just like trade all these and build your model, your whole trading model should be about these four things. I promise you, within the next 3 to 4 months, you would be a good trader. You would be a good trader doesn't mean you are going to be a profitable trader yet. There are still habits, there's still risk management and everything. You get, so you would be a good trader. You would know how to trade 100%. Then the rest is just your own habits, your risk management and everything. I'm still going to, because obviously you guys are still going to, we're still going to talk, so I'm still going to break everything down for you guys. But these four things are the most important things that you need to know: direction of the market, your point of interest, your liquidity, and your entry. This liquidity provides you with an entry and exit. Your entry gives you the entry signal that okay, this area is valid and this is what price is reacting from. The direction gives you the direction of the market and point. That's it. Simple. You don't need anything outside of this four. You don't need anything outside of this four to be a successful trader. So if you work, I've taught you guys three things. I've taught you guys three out of these four. And this last one, I'm intentionally not teaching it to you guys before. If I teach it to you guys, it will do a lot of good than damage right now. So I want you guys to go, and it will do a lot of bad than good right now to you guys. So I want you guys to go and master these three things. And you need to prove it to me that you've mastered these three things by showing me a lot of data, a lot of screenshots highlighting all of this. I want you to show me a lot of screenshots. And if you can get a system, do the analysis on the system, break it down the way I'm breaking it down, and send me a screenshot of it. And write everything beside this. This is the break of structure. This is this is, so write anything beside it. You get. I'm not going to teach you guys entry. If you like, to know, not like, you need to master these three things first before I teach you entry. Simple as that. Yeah, back test and forward test. Forward test means you would be in the market looking out for it. Back test is just to show you that it works. Forward testing, it will prove it to you how it works. You get. Forward testing proves to you how it works. Back testing shows you that it works. So these three things, if you have any question on these three things, enter my DM anytime. Even if it is 4 a.m., text me, take a screenshot. This is what I'm saying. I don't understand this. How do we get here and everything? I will break it down for you. I will teach you. I want you guys, see, you only earn the right for me to teach you these entries if you've mastered these three. Because I obviously just don't want to teach you. I want to teach you so that you know. Like you becoming a good trader is like, it's my reward for teaching you. You get. I don't care if you like this thing. You becoming, so just these three things, go and master it. Go and master it. And let me give you guys one tip in trading. This is the statistic on trading. If 100 people should start trading now, out of those 100 people, 90% are going to quit. Like, they are not even going to see it through. They won't trade for more than 3 months before they quit, because it's a very high skill to know, because it's a psychological game. And out of those 10%, 5 of them are going to stay for a very long time before they give up. And the remaining 5, two are going to be break evens. They are going to know how to trade, but they won't be making enough money. They're just going to be surviving, barely surviving. And the remaining three are going to make money. Like, only one of them will be super rich, and one will be rich, and one will just be okay. So that's the statistic on trading. So if you like, don't take it serious. This is my part. My part is to teach you. The hunger to be successful is within you. I have nothing to do with it. I cannot, like, I can take you to the river. I cannot force you to drink water. Your choice is to drink the water if you are hungry. So if you are hungry enough, backtest and send me. I'm not going to remind any one of you to backtest. I'm not going to remind any one of you to backtest. If you are hungry enough, backtest and send me the data. Then when you've sent me enough data and I see and I've made all the corrections and I see that you are good to go, then you've earned the right of me teaching you the entries. If you do not back test and you do not forward test and you've not earned the right, I would never teach you the entries. You can go and look for entries online. They will teach you stuff that will fuck you up. None of my concern. But the entries that I use are very, very specific. And if you do not earn it, I am not going to teach it to you. So you need to go and earn it. You need to prove to me that you understand what I'm teaching you. You need to prove to me that you want to be a successful trader. You really need this. If you need it, you know how to get it. So that's for the entry. And on these three topics, go and get to work, come back with me with data, and I'll do the necessary corrections. If you have any question right now about them, ask me before I end this stream, and I'll try my best to break it down as vividly as I can. Okay, good. So if you understand, get back to the chat and back test, forward test. The forward test, I mean, like on Monday morning, show me what you are looking at in the market, show me the pair that you are looking at, and if it happened, predict the market. If it happened, show me the results, and I'll make corrections and everything. Just that's how forward testing looks. On back test, you go to previous data, mark your break of structure, your point of interest, see how it works, and send it to me. Okay, then I'll make the corrections. Okay, you are right here, you are wrong here, this is good, this is not good. That's how you learn. So, Tejiri, are you good? All right, so see you guys in the group, and hopefully you guys take it serious, because uh how will I say it? Here's a little motivation for you guys. The fact that you are interested in trading, it means uh either you saw the lifestyle or you are just inspired to be great. And if if you want to be great, there's always a price you need to pay for it. You need to be like, you need to be total locked in. You need to be insane. Like, you need to be delusional about what you want before you can actually get it. In this industry, the stats are not even in your favor. So you need to be delusional. You need to be like a traderholic. You need to give your time to trading before trading gives back to you. You get, you need to give your time and dedicate to trading before it gives back to you. After you giving your time and everything, then you can just get to a level where you don't even need to look at the chart because you've already understood what you are looking for. You just one what like this, you've marked the zone, you place your the trade, and you're not even interested in whatever is happening in the market again. So that's the level you will eventually get to. But at this level, you need to be constantly watching the chart. You get, that's the only way out. So peace out, and see you guys next time. Have a lovely weekend.